US equities have been outperforming international equities over the last decade or more. And the reason is that there are more higher quality companies in the US than international markets, if you measure in terms of margins, in terms of growth.
You'd be hard-pressed to find another international market that has topped the performance of the S&P 500 this year. That being said, US stocks now are very expensive compared to their fundamentals.
There are hundreds of companies in international markets that outperform the US. And those typically are companies that are multinational, high-quality companies. Now you can have competitive returns versus the US and diversify your risk, because remember, the US is very concentrated in just 10 stocks. Now, what's coming in 2025 is a very interesting period, because we have President Trump, who seems to be a transformational president. And his policy can have positive or negative effects.
Stocks around the world tend to sort of trade roughly in line with one another, but owning stocks trading in different markets can sort of help your portfolio weather a storm. So value-conscious investors might want to look abroad for a better deal.
So one of the areas that I think US investors can benefit for investing in international markets is in the luxury space. We all know that the best luxury companies happens to be in Europe. There are two particular luxury companies that we think should do very well in the future. One is Hermes.
Hermes, the French luxury fashion giant, has seen pretty reliable earnings over the last few years. Of course, it's best known for its products like the Birkin bag and the Kelly bag. These products inspire intense loyalty among customers, with people waiting on waiting lists for years to get their hands on one. And even another benefit of owning these products is that they actually appreciate in the secondary market.
Another company is actually a luxury company on wheels. Ferrari, they make 10,000 cars per year, more or less. The average price of their car is $400,000. Similar to Hermes, they have a classical brand. But in addition to that, it's a company that also innovates. By the end of 2025, they're expected to introduce their first electrical vehicle. Another sector to consider for international investing is the defense space. Rheinmetall is a German company, and they are one of the largest defense companies in the world. They are known for military vehicles and ammunition.
Their shares have benefited enormously from the war in Ukraine. Rheinmetall stock is up nearly 120%, and over the last 5 years, it's up about 500%. President-elect Donald Trump has threatened to reduce US support for NATO and also the war in Ukraine, which could sort of create an opening for European defense contractors to sort of fill the gap.
There's a lot of risks in the air, and no companies are bulletproof. I think one of the risks that we have to be mindful of is the risk of inflation. And if inflation gets out of control, there is going to be an impact on consumer sentiment.
If you're investing in Europe, investors should be aware of the risks. The European economy has sort of struggled as of late. President-elect Donald Trump has threatened to slap tariffs on many of the US's major trading partners, including the Europeans. If he follows through with these threats, it could impact the top-line growth of many of these companies. One last risk investors should pay attention to is the US dollar. It's been very strong lately, and some believe it could continue to strengthen during the first year of Trump's presidency. If that happens, a stronger dollar could make European stocks sort of less attractive to US investors by just sort of eating into their returns in US dollar terms.
When you just invest in the US market, you basically have a very concentrated portfolio. The advantage of diversifying to international stocks is that you are diversifying your risk, you're lowering your correlation, which is particularly important in a year with so many uncertainties.